Good morning. It's Thursday, August the 8th, 2013. This is AGORACOM News TV. This is a program where we go through various different press releases that come out on a daily basis in the small cap mining sector. And the goal is to find the best press releases from a day-to-day basis. I'd also invite you to our End of the Week program that George Cholis and I we then go over the best of the best from the week of news releases, and ultimately our goal is to help our audience find good quality companies to do their homework on, and hopefully find big winners in those from doing that homework. I'm Alan Barry Labucan. I'm the chief market commentator for AGORACOM. Today I have found 4 press releases that I wanted to discuss with you. We've got quite a bit to talk about, so I'm going to get right to it. We'll start with Primero Mining earns $105,000 in Q2. Primero reported their second quarter quarterly results. They had record gold and silver production, leads to production guidance increase. Some of the highlights from their information or from their press releases: record production, gold equivalent production increased by 16% over the same period last year to 39,800 or 39,089 gold equivalent ounces. Gold production of 26,000 ounces of gold, and silver production of 1.46 million ounces. They have a low cash cost and all-in sustaining cost. Their cash costs are $551 per equivalent gold ounce, or $167 per gold ounce on a byproduct basis, and all-in sustaining costs of $659 per ounce. They had a Social Security liability impact was for the second quarter, which was $6.9 million, covering their last 3 years of Social Security in Mexico. They had strong earnings and cash flow, adjusted net earnings of $17 million, and operating cash flow before working capital changes of $16.9 million. Their balance sheet remains strong. They have a cash position of $130 million as of June the 30th, 2013. They had their highest silver sales at spot prices. Silver sales at spot market of 603,000 ounces, which is a 28% higher than the same period in 2012. They closed on a transaction. They had exploration success. There's a quote from the president CEO, and he stated, and I quote, "The expansion of the San Dimas mine is on schedule to be producing at a rate of approximately 160,000 gold equivalent ounces per year by the end of first quarter of 2014. During the second quarter, mine throughput that exceeded the current mill's nameplate capacity, resulting in record production levels while also allowing us to stockpile lower grade ore. We generated comparable adjusted earnings to Q2 2012 despite much lower metal prices. We also successfully completed the Cerro de Gallo acquisition and have subsequently been advancing the project with a construction decision expected early in the fourth quarter this year. Conscious of the lower metal prices, our management team has been analyzing cost-cutting and productivity improvement initiatives throughout the organization in order to extract maximum value from our assets," end quote. So here you have a company that, although you've got lower gold and silver prices, they're still making money. They're still building up their cash position. They're still doing acquisitions and doing all the right things. We do a series called our Leadership Series, and these are the kind of companies that we're looking for our Leadership Series. We want companies that, despite being in a tough market, are still working hard for their shareholders. Now, I would also suggest that I think that there is a turnaround coming for the sector. I think it's much closer than many people believe. And as the prices of gold and silver go up, it only enhances the bottom line, which is, for this company, even doing okay in a tough market. So I'm very optimistic for this company's potential, and I think it's a good one to do some homework on. The next company we're going to talk about is Timmins Gold. Timmins Gold earns $972,000 in their Q2. They announced their financial results for the second quarter ended June 30th. All numbers are in US dollars. Their metal revenues were $35 million on sales of 28,024 gold ounces, compared to $38.2 million on sales of 23,499 gold ounces the same period last year. This represents an 8% increase in revenue over the prior year, primarily due to the decrease in gold prices beginning in April 2013. So they increased their production, didn't make as much money because the price isn't quite as robust as it was last year. They talked about the average London fixed price was $1,450 compared to $1,609 per ounce during the same period. 12% decrease over the prior year in the price of the metals on average. A significant portion of second quarter sales occurred in the month of June due to the timing of gold production, which coincided with a particularly weak period in the gold price. As a result, the average price they realized decreased to $1,253 per gold ounce compared to $1,624 per ounce during the same period of last year. Profits from operations was $3.4 million compared to $14.3 million. Obviously, that has a lot to do with the price of gold. 76% decrease over the prior year due to the lower price of gold. And they also had a $5.5 million impairment charge on their non-current unprocessed ore stockpile during the same period. Earnings were $1 million or 1 cent per share compared to $6.7 million or 5 cents per share. Represents an 8. It goes on. You know, the bottom line is that you know, they didn't do quite as well in this quarter as they did last year. They're producing more, which is a good indicator, but they kind of had some bad timing on their on when they had to sell most of the gold from the quarter, and also an impairment charge. There's a quote from Bruce Bragagnolo, who is the CEO of Timmins Gold. He stated, and I quote, "Q2 was a very challenging quarter for the entire gold sector. For the company, the high levels of volatility and rapid decline in the gold price led to decreased revenue and a $5.5 million impairment on our ore stockpile. On a positive note, our production has stabilized and our all-in sustaining costs are among the lowest in the gold industry. Despite the impairment, the company still managed positive earnings. At current gold prices, the company remains self-financed and expects to generate free cash flow for the remainder of the year." End quote. So this is sort of indicative of a lot of companies in the industry, not just a smaller producer like a Timmins Gold. You know, they're seeing a lot lower prices. It's really impairing their profitability. This is why I don't think that this low price of gold is sustainable for the long term. You know, when you have companies that are running very close to not making a lot of money with prices at these levels, and it's like I said, it's not just for a Timmins Gold. There's a lot of gold companies, producers out there that are running into this problem. You know, it's gonna put pressure on the supply chain. It's going to make it so that some of these projects are not viable. I think that that this is a key reason why I believe the price of gold has bottomed. Now, as it starts to get better, obviously companies like this will start to see a much better sequential quarterly results if the price gets better, as I think it will. So what you'll probably see is a lot of these stocks sort of bottoming out and then getting better as they follow the price of gold up based on their production profitability. So Timmins Gold does have something good going, really good going for it. It is a low-cost producer. Now they could use a better price of gold and would probably help them see their stock bottom and perform a lot better in the near term. Another company that I wanted to talk about today was Fission Uranium and Alpha Minerals. Actually, I guess it's two companies. Fission Uranium Corp and their partner announced 18.5 meters of uranium mineralization, including a total composite of 4.94 meters of off-scale as Fission expands their ROOE zone. Fission Uranium, the operator, and their joint venture partner, Alpha Minerals, provided results of an additional 4 holes on this ROOE zone. You can find that in their press release. These are preliminary results. They're not your lab results yet. They use a handheld scintillometer to test the radioactivity of the drill core. It does give you a good indicator of what's coming out, and we've seen this over and over with Fission's results, so I'm pretty excited about this additional mineralization that they found. There's a quote from Ross McElroy, who's the president, CEO, and chief geologist for Fission. He commented, and I quote, "We are pleased with the further expansion of the ROOE zone, which still remains open. Hole 079 is a particular highlight, as its results are the strongest yet on line 015E, and the quantity of off-scale is very encouraging," end quote. And so, I think Alpha and Fission have a great project here, their Patterson Lake project. It looks like it has the potential, quite a significant potential, to have a large multi-million ton or million-pound uranium discovery that's high grade and close to surface, which is very similar to what Hathor had, and Hathor was bought out for $465 million. I think that there's still a lot of blue sky ahead for Fission and Alpha, who are 50-50 partners on this project. Their symbol is FCU, and Alpha's is AMW. On those companies earlier, I forgot to give you those symbols. Timmins Gold is TMM on the Toronto Exchange, TGD on the New York Stock Exchange. Primero is P on the TSX, and PPP, 3 Ps on the New York Stock Exchange. Okay, so now I'm going to go into our final company. The final company is Kaminak Gold. They drilled 44 meters of 2.69 grams per ton gold at their Coffee project. Kaminak drilling extends near surface oxide gold mineralization along strike at Coffee. They released 54 drill holes from their continuing 2013 drilling campaign at the Coffee Gold Project in the Yukon Territory. You can find the details of all those drill holes. I'm just going through some of them. I'll pick some randomly here. They had 1 meter of 5.65 grams per ton gold, 12 meters of 1.55 grams per ton gold, 16 meters of 5.6 grams per ton gold, and a bunch more that are quite similar to that in their Supremo regional drilling. At Latte Zone, they had 2 meters of 3.05 grams per ton gold, which was their best result there. There's plenty of drill holes there you can go over. They look pretty interesting to me. Drilling successfully identified shallow, predominantly oxidized gold-bearing structures within the Supremo Latte and Double-Double area, which is host to the majority of the 3.2 million ounce National Instrument 43101 inferred mineral resource estimate consisting of 64 million tons, grading at 1.56 grams per ton gold, at a base cutoff of 0.5 grams per ton gold from oxide and material, a transitional material, and a 1 gram cutoff for the sulfide material. Then they go into the various different highlights. There's a quote from Ira Thomas, who is the president and CEO of Kaminak, and she commented, and I quote, "Kaminak is nearing the end of a well-executed, successful drilling campaign that is focused on delineating near-surface oxide gold mineralization in the Supremo Latte double-double areas at Coffee in support of our first preliminary economic analysis set to commence in early 2014. While we have yet to define the limits of this extensive structurally controlled hydrothermal gold system, where an inferred NI 43101 resource of 3.2 million ounces was established in 2012, drilling this year has so far demonstrated good continuity and connectivity between the deposits. Further, we have continued to delineate near-surface, potentially heap leachable, high-grade zones that could represent accessible early-stage mining opportunities. Indeed, the presence of considerable shallow, high-grade ounces within the block model is a distinct advantage for the project as we begin to investigate future mining scenarios that take a disciplined approach towards capital investment and maximize margins." So there's another company with good drill results, well-managed company, a really good group, a really well-known group of people are involved with that company. I'm interested in the project, been following it for a few years now. I'll be really interested to see the results of the preliminary economic assessment work that they're doing. This will give you a better idea of what the mining potential is for the Kaminak, for their Coffee project. So that's the various different news releases from today that I found that sort of stood out to me. This is what I've always done on a daily basis since I started my reports, Allen Berry reports. Back in 2005, I've always gone through the various different news releases, tried to pick the best ones out. Of the best ones, I've then go do my homework and try to refine and find the best ones that I want to feature in my reports. And so that's what I'm doing now that I'm the chief market commentator here at AGORACOM, right before your eyes. You can see the companies on a daily basis that stand out to me. And then again, at the end of the week, George Cholas, the founder of AGORACOM, and I, we go over the best of the week's best. So we're putting together a lot of great shows here at AGORACOM. Not only do we have the news, the weekly wrap-up, we've got a leadership series where we're going out, we're finding companies that in a tough market are still doing a lot of work to enhance their shareholder value. They're not just pulling in their horns and doing little. They're not the kind of companies that have no projects and no money. I call those zombies. They're not the ones that are pulling in their horns and doing little for their shareholders. Those I call dormant. These are companies that we call leaders because they're working hard for their shareholders and they're trying to build their companies up. And I think that when the market turns around, which I don't think is that far away, these leadership series kind of companies will be the ones that are first to move and do well. And that's why we're putting together a whole lot of really great shows here at AGORACOM for our audience, and our goal is to help you to find good companies to do your homework on and find some big winners in there. On that note, I'm going to close, but before I do, I always want to stress it's important for you to do your own homework and speak with your financial advisors before making any investment decisions. I'm Allen Berry Labucan. I'm the Chief Market Commentator for AGORACOM. Have a great day, and we'll talk to you soon.